Okay then, in today's video we're going to be discussing about support and resistance. And as we have been taught, support and resistance are levels in which price tends to have a reactions at. Support level and resistance level are level in which buyers and sellers tends to have high probability of the market going to their direction. Or let's say support and resistance level are levels where market has the high probability of reversals and tends to have more reactions on. So going on, what I must tell you is that support and resistance strategy or model, as you may call it, has been in existence for over 100 of years now. So this support and resistance, okay, according to Peter Tuchman, support and resistance has been in existence way more before he came into the system. And who is Peter Tuchman? Peter Tuchman is a trader who has been in this game for over 40 years. He has over 40 years of experience in trading, and he's one of the richest. He's one of the richest famous trader we all know. He trades for hedge funds and he has experience in institution trading. Like, they are one of the big men in this market. So according to him, he said support and resistance has been in existence way more before he came into the system, and we don't have to like stress the system or change the system. We get. So what people believe okay, to the concept of support and resistance mainly is to know where the price is coming from and where the price is heading to, and to know the lowest point of the market to get the safest point of the market to enter the market at a particular time during the chart analysis. So, and again, I want us to like understand how this support and resistance work, how it is being used and how it is drawn. But firstly, let's understand how support and resistance is being used and what they are used for. Support and resistance are mainly used for maybe to identify breakouts and retests of the market. And again, support and resistance are also used for entering and exit of the market. And that this entering and exit of the market is one of the most important parts of trading that you must understand. Because once you know when to enter the market and when to exit the market, definitely you're making money out of the market. So how it is drawn? Support and resistance are drawn from the highs and lows of the market. The highs and lows of the market. So let's just look at this example. We have this. We have this. And we have this. Okay, let's stop here. So as you can see, the trend of this market is uptrend. So from the definition I've given you a few minutes ago, we said support and resistance are drawn using the highs and lows of the market. So in order to draw the support level of this market, we are going to, let's say, using this part, we're going to draw this is the support level of this market. So what we'll be waiting for in the market is to see price crash down to this level and gives us a reaction, then we'll do what? We'll buy this market to the upside, and we'll be aiming what? The high of the previous high of the market. Sorry, we'll be aiming the previous high of the market, which is the higher high. So from what we said before, it is used to determine your entering and your exit point of the market. So we've used this now to determine where we are going to enter the market from, and now we have this to determine where we are going to exit the market from. As simple as that. So in resistance 2 is vice versa of what support is. So, but the problem we have with support and resistance is most times price do not respect the point in which we want the market to reverse from. Let's say we want this market to reverse from here. How do we know that this point we want this market to reverse from is not valid again, or it has been invalidated? In order not to take losses, how do we know? That's where knowing price action comes in. So we are not going to be discussing about price action in this particular class. We'll discuss about price action as topic of its own later. So what we'll be discussing here is just support and resistance. So going on to the next, we have so let's even discuss about what other people thinks about this support and resistance. You know, in this present day, we have so many strategies that are becoming more complex, and I can say newbies and intermediate are finding it very difficult in these strategies that has been coming in over the years. Some of these strategies are, let's say, SMC and ICT strategy. SMC, which is what is it called? Smart money concept. So all these strategies that have been developed in this market recently, these strategies, I can tell you that they are basically coined out from this support and resistance level. So okay, in smart money concept, this is what we were taught. I want to just use this to justify what I was saying earlier. So in smart money concept, this is what we were taught. We were taught that when we have this, then we have this, we have this. Okay, let's wait here. I'm coming rather. So in smart money concept, this very point is known as the transactional liquidity. This point is known as the transactional liquidity. This is transactional liquidity. We expect price to come and sweep this. So, and according to the strategy, this is the liquidity. This is the liquidity that price swept before tapping into our POI. Which is our point of interest, where we want to buy the market from. So the difference between smart money concept now, the difference between this smart money concept and support and resistance strategy is this identification of the identification of this liquidity here. While in support and resistance, we often look at the price action at our support resistance in order to determine if if the support level or the resistance level is still effective. But the SMC traders tends to use the liquidity level to determine if their POI, which I also call the support level or resistance level, is still effective. We can as well apply this. Model into this our support and resistance to know if the levels are still effective. But if you have traded support and resistance over the years, you understand that using price action can also determine the same thing that the liquidity level determines here in SMC. So where they have this, once they have the liquidity sweep here, they will enter the market from their point of interest, which is the POI, to the upside, calling this place the protected low. This place as the protected low, and they will now place their position, long position, buy long position here. This is how it is being placed, targeting the previous high of the market, then placing the stop loss little below their protected low. And the same thing is applicable to support and resistance. We do the same thing in support and resistance. We target our next high, then we place our stop loss little below the support level. But one of the advantage I've found using support and resistance strategy over all these strategies is support and resistance strategy tends to give you the most like the stop loss in support and resistance are relatively small. They give you the exact point in which you are supposed to enter the market. So let's head on to the practical aspect in chart analysis. Let's do the rechart analysis of this. In rechart analysis, what did we discuss? What am I even saying? In rechart analysis, we discussed that support and resistance are drawn using the highs and lows of the market, and I like to start with identifying the trend of the market before I know where to start drawing my support and resistance. So from this market, I have known that market has broken this high. From what I'm seeing, market has broken this high, so I often use my rectangular, I often use my horizontal ray. I often use my horizontal ray to mark out the previous high, then go down to the 4 hours. This is the 4 hours. Now I've seen the previous area that price had reaction from, and the area is where is here. So I will do it. Let's place this very well. You don't mark you don't place your horizontal ray on the tip of the, what's it called again, on the tip of the candle, like from the wick of the candle. You place it in between the body and the wick of the candle. That's why I placed it here. That's the correct way of placing it. So, but coming to the right hand side, which is your main focus on this market, because we are done with what happened. The reason why we go to the higher time frame is to understand what happened in the market previously, but all our attention is basically set to knowing where to enter this market or knowing where to look out for this market. That's where our attention is at. So where is the lowest point of this market right now? This is the lowest point. I will still use my horizontal ray to mark it out, and the highest point of the market will have this. So now we've gotten all the vitals informations we need. This is we've gotten the highest point as this place, and we've gotten the lowest as this, and we've gotten the previous reaction as this. So now going down to 2 hours time frame, we want to get the market details very well. Going down to the 2 hours time frame, we can mark our supports, our resistance level to be here. You don't want to mark it too big, you mark it as tiny so that you get the exact point the market is reacting from. So from what we have here now, you can see that, let's use the support level. You can see that each time price comes to this level, it gives us reaction to the upside. Here it gives us reaction to the upside, and when price touches the price level, it gives us reaction to the downside. It gives us reaction to the downside. Finally, price broke out of the level. So price breaking out of this level now, but where our main focus is at now is where the price is currently at, which is at the support level. So what do we now do on this support level in order to make money from this market? So in order to make money from this market, I love to boil down to my 1 hour. If we were in this market earlier, we should have looked out for what the reactions at this level, and maybe we would have gotten this market and sold it down to this point. We'll be targeting to sell down to this point, but since we've come to this market and this is where we met the market, the only thing we have to do now is to wait for this market to come back to this level, give us a nice reaction. How do I do this? Give us a nice reaction. When it comes back to this level and give us a nice reaction, go back up, then we'll sell down this market to this. I always love to use double top for my entry, not double bottom for my entry, because it always confirms that the market is tired of pushing high, and again, you want to look out for other confluences, not just this. There are other confluences for entrance, because most times price might also get to this level, it will go down as if it wants to sell, and the next thing, boom, it breaks out of your support level. And when it breaks out of your support level, you know what will happen. It has hit your stop loss and you will lose money from the market. So there are other confluences that you look out for when you want to enter this market from the support level. The support level is just basically the key level in which you're looking out for reactions to happen. Then other things follows. The structure of the market, the confluences you use, and the momentum of the market. These are all the things you need to look out for when you want to enter this market from support level or resistance level. We have other examples, but I don't want to make this class to be too long. You go back and backtest this thing I've shown you. In our next video, we're going to be discussing about the market structure, and in subsequent videos, we're going to be discussing about price action, and we will as well discuss about confluences, exit and entry strategy, and the confluences of getting into the market. So this is all for today's class. Just make sure you practice, because you can't get this in a day. You need to practice this. Use months to practice. Lock in, practice, and you get everything I've taught today. Thank you.